Why do you need mortgage insurance? And just before we get into that, I want to make sure I define something for you. Mortgage insurance is not the insurance that you buy in the event of death. And so if something were to happen to you or to your spouse, that an insurance policy would pay off your mortgage. That's not the kind of mortgage insurance we're talking about. That's important insurance, but that's not what we're discussing. The mortgage insurance that I'm discussing right now is the insurance that a lender or a bank will make you get if you don't have enough of a down payment. And that insurance is designed to protect the lender in the event that you stop making your payments. And so it used to be many years ago that in order for somebody to purchase a home, they had to have a substantial down payment, oftentimes half of what the home was worth. So if you were purchasing a home for $500,000, you would have to have cash of $250,000 to even be able to go to the bank and ask them to lend you the other $250,000. But as life went on and as the populations grew, it was becoming obvious to the government that not everyone was ever going to have that kind of money available to purchase homes, and the price of homes had continued to increase as well. So the government said to the banks, look, we need to stimulate activity in we need to help more people become homeowners. And the banks said, well, that's great, but we're not prepared to take on additional risk. We feel that if we're going to lend somebody half of what a home is worth, that's probably good enough for us. And the government said, well, what if we insured the mortgage for you? So bank, if you lent these homeowners more money so that they required a smaller down payment, that we will protect you in the event that that homeowner doesn't make their payments. So that's a very simplistic definition of what mortgage insurance is and how it came to being. But why do you need it? You need it because without it, many people would not be able to own or afford a home. If you think about it, people putting down 5% or 10% or 15% wouldn't have the opportunity to purchase a home if mortgage insurance did not exist. And so what we've noticed over the course of the last couple of years is that the mortgage insurance rules have changed, and many people aren't really familiar with what many of those changes are, but it doesn't change the fact that you need it, because without it you may not be able to even purchase a home. Banks are only prepared to lend people so much money. They're not prepared to take crazy risks. And on one hand, because they hold our money, I think we want to see them do that. We don't want them taking risks with our money. But on the other hand, we want to see people own homes. Home ownership is probably one of the largest decisions that many people will ever make, and so mortgage insurance allows that to happen. So why do you need it? You need it because without it, you may not be able to purchase the home that you want. It's important to note that the largest insurance company in Canada is CMHC, and that's a federal corporation. But you may not know there are also two private insurers in the country. One is called Genworth, the other one is Canada Guarantee Mortgage. CMHC is the most popular, by far the largest, but these other two insurers, they're able to help as well. So why is that important for you to know? Because if you're looking to purchase a home and you don't have at least 20% as a down payment, then you're going to need to get mortgage insurance. But the mortgage insurers all have their own rules for who they will give mortgage insurance to. Now, generally speaking, most people can apply for through their bank and get the mortgage insurance that they're going to require. But in the event that CMHC decides, you know what, we don't really like the property, there's something about the borrower's financial situation that we're not comfortable with, so we're not going to insure this mortgage, the bank has the option to use the other two insurers in the marketplace as well. And so it's important for you to know, if you're working with a banker, a mortgage broker, or a mortgage specialist, that you have other options if you need them. So mortgage insurance is important. It's not insurance that protects you in the event of death for your mortgage to be paid off, but rather it protects the lender in the event that you stop making your payments and the bank is looking at realizing a loss on the home. They will exercise the insurance policy that you paid for to make sure that they're able to get their money back.